Welcome to Biztech's Asian Midday Marketwatch. Our guest today is David Kuo, founder of the Smart Investor, and he's coming out of Singapore today. David, great to have you on the show.
Selamat tengah hari. How are you?
Selamat tengah hari. We are very well, thank you, across the region. Now, before we get your insights, David, let's take a look and see how markets are performing across the region. Now, first, we'll start, however, with the crypto market. The crypto market is down. Bitcoin is at 47,005. It's down 4.15%. Ethereum is at 3,776.55. It is down 6.02%. Looking at regional stock markets, we start close to home with the SGX Straits Times Index. It's at 3,123.64. It's up 0.12%. Now, across the region, we've got the KLSC, which is at 1,487.36. It's down 0.5%. Shanghai is at 3,670.07. It's down 0.31%. The ASX All Ordinaries is at 7,702.9. It's up 0.07%. The Nikkei is at 28,417.5. It's down 0.78%. Hang Seng is at 23,652.5. It's down 1.27%. And rounding up the numbers, we got the Kospi, which is 2,980.63. It's down 0.7%. So largely red across the region. David, tell us why.
Well, I think most of the Asian markets are taking their cue from the US, and over in America, we saw both the Dow and the Nasdaq heading lower. A lot of people were expecting both those markets to be heading higher, but unfortunately, they turned around and they started heading down. And that was primarily because of Omicron. You know, if you want to know what's going on, sometimes just have a look at the Kuala Lumpur Stock Exchange and just see what are the gainers there. And we see that Supermax is amongst the gainers, so too is Top Glove and Hartalega. So people are very concerned about Omicron. And it's not entirely surprising, Brian, simply because we had some news yesterday from the UK telling people that there was one Omicron case in hospital, and sadly the patient passed away. And then we hear that there is one Omicron case now in China. So China has been very vigilant, very keen on ensuring that they have zero COVID cases. But even still, that blasted virus manages to get in somehow, and they have one case in China. And the thing we know about viruses is if there is one case, there's going to be many more around that haven't been either detected or are just waiting to come onto the scene. It's what I call the cockroach theory, Brian. You have one cockroach in your kitchen, and you know there are plenty more. You don't just have one cockroach. So unfortunately, I think Omicron is dragging share prices lower a little.
So David, the key question then is Omicron going to impact Southeast Asian markets? It's not a question of if, it's probably a question of when.
Well, the question I think is what the authorities want to take away from this. Are we going to say that Omicron is inevitable? In other words, that the COVID Delta variant has mutated in some ways, and then we're going to get Omicron, and then we start working further down the Greek alphabet to come up with something until we reach Omega, and then we have to. And then we have to think what happens after Omega. I mean, do we start going back to Alpha again, or do we call it Alpha something? That it's not a joking matter, but it is a question of how you are going to be coping with this virus. It's not going to go away by itself, and are people going to be vaccinated? And it seems at the moment those people who are double jabbed are probably not totally immune to the Omicron variant. And so there are lots of uncertainties there, but it depends on how we want to cope with it. I mean, I was reading some guy on Twitter who was saying, somewhat facetiously, he said, hey, look, it's winter. We get colds in winter. What's the big deal? And he has a point. Are we just going to accept the fact that Omicron and COVID is going to be around with us for a while? And if we are ill, then we're going to have to do some testing ourselves, take responsibility, and if we are positive, stay at home. So what are we going to do, Brian? It is a very difficult issue. I remember previously when I was working with the Motley Fool, if I phoned in and said, oh, I've got a bit of a cough and I've got a runny nose, they would just turn around and say, hey, just work from home, will you? We don't want you bringing your cold virus into the office and spreading it around all the people that are there. So is this going to be the same situation with COVID? Are we simply going to say, I've got a runny nose, I've got a sore throat, I don't feel too good, do your ART test, it comes out positive, and then stay at home. Don't go out. Don't even go shopping.
Yeah. Life has got to go on. But
life has to go on.
And among the risks now that investors are facing is, again, more risk out of China. Weibo has taken a pounding today. It's down, I think, at one point more than 9%. Again, increased regulatory risk. What else is bothering you as an investor today, David?
Well, China is certainly up there, but I mentioned to you the last time when I was on your show that it's fine to invest in China as long as you, number one, understand the risks, and number two, build in that risk into the price. So if you had waited for Weibo to actually sort of drop, say, 9%, it might drop another 9% tomorrow, there will be a point when it will be attractively priced. And you will say, okay, I think I factored everything that I need to factor into this. And so therefore you don't price things to perfection. So that is one of the risks. The second one, of course, is what is going to happen to the Fed on Thursday. What are they going to do about interest rates? What is the narrative going to be? Is the Fed Chair, Jay Powell, going to be more hawkish? In other words, is he going to try and taper a lot faster? At the moment, they reckon that they're going to be cutting the amount of tapering by 30 billion. Well, no, 15 billion. I mean, could they actually sort of increase it to 30 billion and taper faster, which therefore means that interest rates could go up quicker next year, and that could be a drag on the stock market. So everybody will be listening to what Jay Powell has to say on Thursday when he tells us what it's going to be. I suspect what is going to happen is that the word transitory is going to disappear completely. He's not going to even going to mention the word, but maybe a new word will come into his lexicon, maybe something like elevated or heightened risk of inflation. And if he does that, then it probably means that interest rates are going to go up regardless of what happens to Omicron or any other variant that comes into the market, Brian.
Now, David, last question, quick question actually. What's your outlook then for 2022?
A lot of uncertainty, and I think anybody who tries to predict what is going to happen in 2022 is probably going to get egg on their face. So I think all the things that we saw now, that we are seeing now, is probably going to play out in 2022. I think we're going to see more variants of COVID. I think we're going to see a recovery, but the recovery won't be even. What we're going to be seeing is different regions will have different rates of recovery, and even within a country, the recovery will be fits and starts. So it'll look as though it's recovering, everything is fine, then we will have to take a step back. Interest rates are something else that I'm looking for, and China. China is becoming more and more unpredictable at the moment, and people need to be aware of what's going on. Geopolitical risks, that's another one. So we know that Anthony Blinken is coming to Southeast Asia to try and mend the ties with many of the countries in the region. And so there's going to be some pushback from America, which is not going to please China a great deal. So be aware of all sorts of things happening in 2022.
And also, David, something that's not on the radar in our part of the world, but perhaps among European investors, is really the situation that's unfolding in Russia with regards to Ukraine. Now, that's an event that potentially will throw markets into turmoil.
I think we can't ignore what is going on, but is it a red herring? Is Russia just simply doing that for its own gains somehow? It probably knows that it can't really invade Ukraine, because that would be a red line. I think that both the EU and also NATO and America will not allow Russia to cross. So I think they've already learned their lesson with Crimea, and I don't think it's not going to happen in Ukraine, but it could be Russia's way of using Ukraine as a kind of bargaining chip for something else. Who knows? I mean, I'm not a politician. I'm not smart enough to be a diplomat. I'm just an investor, and so I look at stocks and I just say, is it cheap enough at the moment? And if so, I'm in there. I'm going to be buying, Brian.
Now, David, as always, thank you very much for your insights and for coming on the show.
Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.